right. Welcome back to another episode of the Brutally Honest Loan Officer Podcast. I am your host, Eric Brown, and my co-host is here with me, the amazing Stephen Brock. Say what's up, Stephen.
Amazing. I'll take that. I will take that. How you doing?
Doing great, buddy. How are you?
Great.
You have a good weekend?
I did. Apparently better than yours as you were putting shelves up.
I mean, shelves that I've had for 3 months. So
That was
when
last weekend.
my mother-in-law moved and they had like an awesome garage decked out with all this like gladiator shelving and stuff like that. So I got some of the shelves, but like the panels that have to go on, I had to put them up. And I'm not the handiest person, but I've told every single first-time home buyer that has bought a house, when you buy a house, you just become handy. You kind of have to. So followed instructions, hung 2x4s, put the panels up, and then got the shelves, but I've got to get more paneling. So I'll be picking that up today. But yeah, a little DIY home project. So good stuff
Yep.
while you were laying in the pool drinking grapefruit beer.
Ranch Waters. Ranch Waters. But we got a guest today. Let's introduce him.
This is Kris Allan with Brightway Insurance. Kris is actually a good friend of mine who happens to handle my homeowners insurance and several of my clients. So he is my go-to insurance agent when I have questions, pretty much about anything. Well, homeowners insurance, that's the topic we'll cover today, but also you have both my car insurance and like my extended families, like car insurance, home insurance, stuff like that, I think. So
Yes, sir.
this is Kris Allan with Brightway. Kris, tell us a little bit about yourself.
Hey, good morning, guys. Kris Allan, Brightway Insurance. I am based out of Longwood, kind of born Florida, South Florida originally, lived here whole life. Got into insurance probably about 8 years ago. Recently became an owner with Brightway. Worked at this agency for just around 6, 7 years, and had the opportunity to purchase the Longwood agency. Kind of keep all my current clients, book of business and whatnot, and been loving it over the last probably 6, 7 months of ownership so far.
Great. Congratulations. Super
Thank you.
excited for you.
Yeah.
You're the boss now.
Exactly.
So does that mean you get to just make your own rules and do whatever you want with insurance?
I wish. No. I had fantastic leadership before the transition, and it's definitely impacted how I run the business, how I look at the way I treat clients, and the topic of insurance in general.
Yeah, shout out to the Davids, David Pajero and David Jones. I know them both. They're both awesome. So shout out to them.
So before we get too deep into the insurance, we always like to ask our guest one question.
Mhm.
Do you believe in aliens?
Oh, 100%. Yeah, I think they're too scared to come anywhere near our planet right now. But yeah, absolutely.
I think he's the first person to just like immediately say 100% yes. Everybody's always wishy-washy about it.
We gotta look back. I think Brett was pretty like, yes, like right away.
I think they look at us like a zoo. They just stand far away and are just kind of taking a look at us.
I can see that.
That's scary. All right. Now for insurance. Let's start with homeowners insurance. And could you just explain the basics of homeowners insurance, what it typically covers, and if there's like specific coverages that are important to Florida homeowners?
Yeah, absolutely. So obviously, when we say home insurance, it naturally is a pretty broad topic. But if we're talking about just someone going out buying their first home, they're obviously going to be living in that home and are going to be needing insurance for it. The main type of policy form is called an HO3. There's probably 10 different types of policies in Florida that you can have, whether you're a landlord renting out a property, or if it's your primary home, or if it's a vacant house. But just to be simple about it, a standard home insurance policy in HO3 really has a list of 10 different major coverages that we could talk all day about. But the big items that it's going to cover, obviously the building, the main home itself, any other structures on the property, like if you have a shed or a detached garage or anything like that. All of these things are listed as line items, and you can really have a certain amount of choice when it comes to how much coverage you want for certain things, especially like personal belongings is a big one. If you're looking at your declarations page, you're going to see two really big numbers. Usually it's going to be the total rebuild cost for your house and then the total amount of coverage you have for all of your personal belongings in the event of
So that's dwelling coverage, right?
Yep,
And then personal property. Those two line items is like what we want to pay attention to. And I know I originally thought the same thing, but a lot of our first-time home buyers, they're buying, let's just say, a $400,000 house. And then the dwelling coverage, they always ask me, like, why is this not 400,000? Explain that.
Yeah, that's probably one of the biggest conversations I have with new home buyers. Not in every deal, but in very specific situations where they see their purchase price or they see their loan value, and then they see how much we're looking to insure it for. And if they see that there's not a drastic difference in the numbers, but if they see that they're purchasing this house for $400,000 and we're looking to insure it for 325 to 350, they're obviously going to ask, why is there a $50,000 to $75,000 difference in coverage? And the big thing that we always have to remind them is that you're not insuring the land, you're not insuring the location, you're not insuring the amenities of where you're living. And the insurance company just wants to know how much is it going to cost us to rebuild this home if it were to burn to the ground and we had to remove the debris of the home that was lost. And that's all they care about. So specifically when it comes to mortgages, the mortgage company is obviously always going to require replacement cost coverage. That replacement cost is based on those numbers, not on the market value of the home.
So we are probably the hottest topic or is insurance in Florida alone. What living in Florida, does that impact the homeowners insurance? Like the rates that you're seeing out there?
Yeah, there's 100 different reasons why Florida's insurance market is so volatile right now. We can talk about Hurricane Irma from 6 years ago. We can talk about, fraudulent claims or this or that. The big thing that I feel right now is impacting our market so much is all these factors leading to the loss of competition when it comes to the amount of companies that operate or are open in specific counties in Florida. Obviously there's special cases where, up in the Panhandle or down in, Southeast Florida where you're located, Stephen, higher risk areas are going to be limited, whether it's a normal market or not. But in, Central Florida, for example, we've seen over the last 5 years, probably about 6 or 7 companies go completely belly up, and then 10 to 20 companies just shut down completely for new policies in specific zip codes, just because of how many claims have been filed over the years. And when you start limiting how many companies are available, well, the 3 or 4 companies that are offering policies in these areas are really going to control the pricing in specific areas because of the lack of competition.
So you're talking about some claims on there. What's the most common claim that you actually see?
Yeah, obviously the first thing everybody's going to think is hurricane, which yes, during hurricane season, a named storm is going to be usually the highest claim that we're going to see on a day-to-day basis. But overall in Florida, the number one and number two, I'd say, and it depends on the time of year, is going to be water claims, and defining that as water coming from the inside of the home, whether that's a leaking air conditioning, a broken pipe, anything along those lines. Those outside of the replacement of a roof because of a weather claim are some of the most expensive claims, because of the amount of damage that can cause based on the time of the water sitting and if mold is involved and whatnot. But besides that is wind and hail claims, not resulting from a hurricane, are some of the larger claims as well.
Well, I've lived in Florida my whole life. I've owned 2 homes, well, 3 technically. And I remember back in the day when like hurricane deductibles were super cheap. Like you got a $500 deductible. And now we're not really I feel like I'm seeing less and less of just a dollar amount deductible that we're increasing to the 2%. I mean, how does the hurricane coverage work within homeowners, a homeowners insurance policy? And like, what are the changes that you've seen? Like maybe on a brand new home, are you still able to get like cheap deductibles or what?
Yeah. So, if we had to throw a number as what is a standard for Florida, the 2% hurricane deductible for probably the last 10 years or so has been the overall standard. In some areas, you might go higher based on the, pricing and whatnot. In a lot of areas, and especially with newer construction homes, you can find certain companies that are offering lower. Like you said, about 5-6 years ago, you could find a flat $500 or a flat $1,000 hurricane deductible from, out of the 60 companies I work with, probably 30 of them were offering one combination of the two of those.
Right.
Nowadays, you're lucky if you find one or two that are offering it on a home that's not new construction, but even then, it's more common to see something like a 1% hurricane deductible offered, which, if the pricing makes sense, if it's only $150 for the year to cut their hurricane deductible in half, I'm always going to offer that if possible. But if it's a home in a high risk area where cutting that deductible in half is going to cost them an extra $1,000 for the year, I'm going to have the conversation with them to weigh out, whether it makes sense or not.
Gotcha. And are there any like special considerations or endorsements homeowners should be aware of regarding hurricanes, or like what are the like other natural disasters? We don't really get too much outside of hurricanes, bad storms, the occasional tornado, I guess. Like, I don't even know. Do I have tornado coverage?
Yes.
Okay. I don't.
Yeah.
Knocking on wood that I don't ever have to deal with a hurricane, I guess.
Yeah. I mean, the specific thing to note is that a hurricane deductible is triggered when a storm is classified as a hurricane. They also call it named storm at that point. So in most cases, a tropical depression, tropical storm, there's a fine line when it comes to how it's defined versus when your hurricane deductible is triggered. You'll hear a lot of roofers talk all the time about, before hurricane season, getting your roof checked out to see if there was any wind damage or hail damage that has happened fairly recently that might be looked at as far as a claim, because if something is filed, it would fall under your other deductible, which is your AOP, all other perils, or non-hurricane deductible. As far as other considerations and endorsements, though, the number one thing to look out for, especially on new purchases and for first-time home buyers, is if the home has a screen enclosure, whether that's, the birdcage style that's over an in-ground pool or something of the like, or if it's like a metal just screened in patio. Most insurance companies exclude hurricane damage coverage specifically for those, and it needs to be added as an endorsement in which you pick the value. So if it's a smaller screen enclosure, you can add $10,000 worth of specifically hurricane coverage for the enclosure itself. Whereas obviously if it's larger, you can go up in dollar figure for that.
What about if it's what about the screens that come down? Does that count part of those screens that you've seen?
Like roller shades and things like that?
Like maybe my wife had talked about it, is like we didn't want a whole bird cage. We're like, oh, maybe we'll screen in the patio where they have those automatic ones that come down that you can roll them in and out of a screen enclosure. So I can screen off my patio when I want to, and not have to worry about mosquitoes and all that, but then I can roll them up.
Great question. So that falls a little bit more in line with another portion of specifics to screen enclosures. So screening material is almost always excluded. When we're talking about, damage to screen enclosures, we're talking about the framing, the metal roof, things along those lines. So screening materials is usually not covered. Damage to a screen like that, obviously the mechanical piece that's connected to the home is considered part of the dwelling. Anything that is physically attached to your home is considered part of your overall dwelling coverage. So in most cases, I would say it's probably if the larger portion of the dwelling is damaged, including that portion of the screen, most of that would probably be covered. How the screening material fits into that is obviously, the insurance company and adjuster are gonna, define that better than we can.
We were all talking about it, so I was like, wait, you talking about they're not covered? Like, do I gotta get separate coverage if I get that? So
well, and then my question, like, So I have a pool with a screen enclosure, but then eventually, it's like maybe 5 to 10 year goal. We want to build like an outdoor kitchen and have like our screen connected to that and just extend our patio and stuff like that. I'm going to have to reach out to you to add that to my insurance policy, correct?
To a certain degree, yeah. I mean, so whenever I am writing a new home insurance policy for anyone, we're obviously running a bunch of different estimates on the rebuild cost. They call them replacement cost estimators. Because I work with so many different companies, I try to run at least 4 to 5 with a bunch of different companies to kind of get a general average as to where your total dwelling coverage needs to sit.
Right.
And usually if they're, let's say the replacement cost estimate is coming out at $515,000. I'm usually going to try to bump that up a little bit just in case there's any changes in the next year of you having that policy. So we're not having to worry too much about, all right, if you add $5,000 worth of renovations or something like that. Well, if we're insuring the property for a little bit higher than its replacement cost at, 525 or 530 or something like that, based on that 515 number, you have a little bit of a buffer coverage. So we're not having to sit there and make changes all the time and worry about things like that. But obviously adding something like a screen enclosure or a pool or, a larger investment like that, that's something you definitely want to talk to your agent about.
So let's also talk about flood insurance. And I think what all of Florida is technically considered a flood zone.
Pretty much.
Let's talk about flood insurance. Is it a standard thing? What do we have to look out for that?
Yeah. So in terms of the state, just like you said, Florida is pretty much one big flood zone. It's defined by a whole bunch of, alphabet letters, not numbers. We have X zones, A zones, AE zones, all kinds of different things that the average person is going to understand. The X zone is the most common. That's your low risk, once in 100-year flood zone. Most of the state is considered an X zone. And in most cases, if you have a mortgage on your property, they're not going to require you to have flood insurance in one of those zones. Any of the special hazard flood zones, an A zone, an AH zone, and things like that, where it's a lower lying floodplain, or where flood maps have changed over the years because of past flood history. In those areas, mortgage companies are almost always going to require there be flood insurance in those. And obviously the rates are going to be a bit higher for situations like that. Flood insurance is 99% of the time going to be a separate policy from your home insurance. There are only, I can count on one hand how many home insurance companies offer an endorsement to include flood coverage on their actual policy. I usually recommend to keep it separate, whether you're going through the National Flood Program, the FEMA Flood Program, or a private flood insurance company, mainly because adding that endorsement onto your home insurance will include any flood claim as a home insurance claim. Keeping the flood insurance separate keeps that on its own style of claims history. So having the flood endorsed onto your home insurance policy can possibly impact, your claims history moving forward with another policy.
Gotcha.
And private flood insurance policies aren't like, they're not as expensive as most people think if you're not in a crazy flood zone, correct? Like if somebody's just looking for like, hey, I just want to make sure I'm covered. It's 1 in 100 years. We what hurricane was it that pretty much flooded a lot of Central Florida, and people are like, but I'm not in a flood zone. Well, flood zone X is 1 in 100 years, and this was the year. But if you're in an X zone, it isn't as expensive, correct?
Yeah, absolutely. So with the National Flood Program, rates are pretty I don't want to say stagnant, but pretty similar across most of the X zone areas throughout the state. Some areas might be a little bit higher or lower just based on how they define the flood maps and whatnot. But right now, for a standard flood insurance policy, which includes $250,000 of building coverage and $100,000 of personal property coverage, the rates are somewhere between $500 and $600 for an X zone policy. I've seen a lot of areas where private flood insurance companies will offer the exact same coverage for maybe closer to $450 to $550. So there can be a little bit of a difference there. Yeah.
Right. And that's per year, not per month.
Oh, absolutely. Yeah.
Yeah.
So,
yeah. We've always had flood insurance on our house since, $400 to $600.
exactly.
Gotcha.
Just in case. I mean, there's like, what was it, Naples a couple years ago where they thought the hurricane was going to go to Tampa,
Mm-hmm.
and then it hit Naples, and Naples didn't prepare, like they didn't, drain out the canals or anything, so it flooded everything.
Yeah, absolutely. We've seen videos of people who had, hurricane rated, perfectly sealed windows, but then there's water sitting, 4 feet up against their window because it's flooding because of how low lying the houses were. It's absolutely crazy.
I don't ever want to go through anything like that. And I pray for the people that have gone through it. I can't imagine like looking out my front door and just seeing like water up to my knees. Oh my God.
Yeah.
Okay, so what other factors influence the cost of homeowners insurance in Florida? Like we're talking about claims, so if you keep making claims, is that gonna, influence your new rate on another house or what?
Yeah, in certain circumstances, I mean, in most cases, with most insurance carriers, anything defined as a weather / act of God, be that lightning, hail, wind, hurricane, things like that. Most companies give a little bit of leeway, or just don't care as much as something along the lines of a fire claim, a liability or water claim, because they see those as something that could be an ongoing issue, or that can poise a little bit of the person who is filing the claim if they have a history of, okay, every 2 years they're filing a water claim on different properties that they own, to get a new kitchen, to get to basically remodel their house essentially just through the filing of claims. They penalize people based on the availability of their policies and general pricing with that. Kind of the two other major things would be obviously location. If you're 4 feet off the East Coast, you're going to be paying quite a bit more than if you're in direct Central Florida. And then obviously age of roof and age of home.
Never eat soggy waffles. Okay. I had to think about it.
You had to figure out where East Florida was.
Okay, so basically don't start a fire in your house every couple of years because your insurance will go up. That's kind of what you're saying.
Pretty much, yeah.
All right, so how can we, like, is there a way to create discounts? Like, are there discounts or something we can try to do to reduce the cost? Like, is it every so often we do like the 4-point and win mitt? Like, what can, like, so a current homeowner right now that has homeowners insurance, their renewals going up, what can they do to like reduce the cost?
Absolutely. So specific to the point you made about inspections, the 4-point inspection is primarily a underwriting related factor with home insurance companies. They're going to require that if a home is over a certain age, just to see the age and condition of some of the major systems in the house, the roof, electrical, and things like that. The wind mitigation is definitely the most important thing in Florida right now as far as possible discounts. Obviously, if you have a newer roof, your last roof might have been from, I don't know, pre-2005. A lot of code changes have happened since then. So bring that roof up to code is going to change the amount of discounts and, durability of your home, and the insurance company is going to reward you for that. The big thing I like to make known to anyone that is coming to me for a quote or is looking at purchasing a home, is based on the age of the home. If a home is built 2002 or newer, and it has a newer roof on it, in most cases, a wind mitigation inspection is not going to be needed, because based on the codes and changes in construction over the years, the insurance companies are automatically going to give the maximum amount of discounts on the wind mitigation inspection. There are definitely some outliers in this. In certain counties, they have different codes, especially down in South Florida, where if a home is of a certain age, they might need a wind mitigation to prove certain newer discounts along those lines. But especially up here in Central Florida, if someone's buying a home that was built in 2007 and has a roof that was put on in 2022, I will absolutely tell them not to see the need for a wind mitigation right at that time, unless they know about something that has been done to the home. Like if the entire home has had hurricane rated windows and doors and garage door added, that is something that is not assumed by the insurance companies to be included in the discount. They would have to get the wind mitigation for that.
Okay. All right. Can you insure a house that has a 40-year-old roof?
It depends on the type of roof.
Shingle.
A shingle roof, you're probably, well, yes, but no.
What if it was taken care of?
Even if it's in perfect condition, our roof looks like it's brand new. The big thing that these insurance companies are moving towards is, one, they're requiring that any roof that they're insuring have at least 5 years of life remaining, whether that's listed on a 4-point inspection or you have a roofer come out and do a roof certification. The big thing that a lot of companies are moving towards is on different policy forms, not just the HO3, but some alternate forms, depending on the situation, is allowing us to insure the roof at actual cash value, not at replacement cost value. And when companies do allow us to do this, they will usually accept a little bit older on the shingle, tile, and metal roofs, based on the age of the roof. They're just going to pay out less based on the depreciated value of that roof.
Yeah, I've seen somebody have a roof where the inspector was like, there is no permits, but this roof looks like it's 10 years old. But the last time they redid the roof was like 1970.
Exactly.
And they're like, I can't tell. Like, it's just so well
The roof
taken
was
care of.
clearly replaced in the last 15 years or something like that, but
Yeah.
with no permits, no proof of when it was done. What do we do?
Yeah, that's a really big thing, especially from 04, 05, especially down in South Florida, is there was so much damage to roofs. And obviously there were 3-4 hurricanes within a 2 to 3 week period. I think before that was, that there were so many roofs having to be replaced that a lot of leeway was given to having those roofs replaced without permits. So
the county just said, do it. Replace
exactly.
it.
Exactly.
They couldn't handle it.
100,000 permits, like just do it.
They couldn't keep up, so they just do it.
Exactly. So nowadays, 3-4 years ago, maybe 5 years ago, insurance companies were a little bit more lenient when it came to accepting roofs without permits, mainly because they understood that there might be 14, 15-year-old roofs from 04, 05 that were, that were still in good condition, but, didn't have permits on them. But nowadays, when we're, almost 20 years past that, most companies are like, all right, if you don't have a newer roof with a permit at this point, we understand your roof's probably 20 years old and it went through all those hurricanes that, it needs to be replaced.
So talking about roofs, I feel like that's always the claims that happen. Can you walk us through, like, what's a typical process for a homeowner to actually file a claim on things?
Yeah, absolutely. So there's not a whole lot of, it's not the insurance agent like myself is not always holding the hand of the person filing the claim throughout the entire process. Obviously, we are here to be the third party, the in between of you and the insurance company in the event that, the insurance company is kind of dragging their feet or you haven't heard from your adjuster, things like that. There's a certain amount of responsibility that the person filing the claim needs to take throughout the process. Obviously, we're here to guide them through that to a certain degree. Really, from the start of a claim, the number one thing is, in an emergency, call 911, make sure you're safe. And then also to prevent any further damage to the best of your ability. So obviously, if a pipe bursts in your house, you want to do your best to go find your main water switch and turn the water off so that further damage is prevented. And then when it comes to the claims process, one of the most important things is timeline. So filing your first notice of loss, taking photos of everything, getting all the information to the insurance carrier as quickly as possible, so that you can start the process to make sure, things don't get worse over time. But after filing the notice of loss, some insurance companies have certain processes as far as you might have to use their preferred contractors to be able to access full coverage for water damage, or to, be able to have, a roof tarped off without having to pay that directly out of pocket. Certain rules depending on your company from there. But obviously the repair and remediation of whatever's going on is the next step in that. They bring out an adjuster to take a look and kind of make the initial offer for repairs and whatnot. They negotiate with the contractor you may be using from there, and then ultimately the closure and payout of the claim. 100 different things can go sideways in the event of a claim, whether that's requiring the involvement of a public adjuster or an attorney. We're seeing a little bit less of the need for that nowadays with some of the rule changes through the state and who gets paid how in the event of a claim. But I think we're seeing a lot of insurance companies kind of tighten up when it comes to them doing things the correct way and following the paths that they need to.
What are some of those new rules?
We can sit here for an hour and talk about a lot of the
Okay,
changes.
is there a very important one that's beneficial? Or I don't want to get into like politics and stuff like that or whatever, but like, is there just something like, is it good things, bad things? Like,
yeah, two of the major ones that we've seen introduced to the state over the last probably 2 to 4 years. One is specific. The statute of limitations on hurricane damage has changed. It used to be 3 years. It has moved down to 2 to 1. I want to say no. I'm sorry. 2 years is the current rule for most situations. The other big one is how attorneys are paid. So if you have a property claim attorney that's involved in obviously mediating between you and the insurance company to say, get you more money to pay the claim out properly and whatnot. Prior to this, they were a big impact on the way rate changes were filed in the state because, they were adding hundreds of thousands of dollars to the total amounts of.
Yeah, the attorney fees were more than the claims.
Exactly. Now they've changed the way that attorneys can be billed and how they can, how they are paid out of a total claims payout. Now it's a percentage of the final claim payout amount versus just adding their fees to an exponential amount on top.
So they're almost paying like a public adjuster now.
Exactly. So we have seen a little bit of turmoil between how public adjusters and the attorneys, they used to work together very hand in hand, and nowadays it's usually separate depending on the severity of the case.
Gotcha.
Okay, let's talk about a homeowner that's owned a home for quite a few years. Like, how often should they be reviewing their homeowner's insurance policy? I mean, is this like a once a year thing that they should reach out to you? Because I feel like a lot of people just get their renewal and they don't pay attention to anything. And in recent years, they've gotten their renewal, not paid attention. And next thing you know, we have an escrow shortage because their renewal doubled.
Exactly. Yeah. A couple different reasons for why, some people don't check their mail. It's as simple as that. Some people just, see a letter in the mail and, we'll throw it out right away. Some people will get an email about the renewal and immediately call me the next day and say, hey, right, I saw my premium went up, $500 for the year. Can we take a look at things? Fantastic. That, I welcome my clients to reach out to me like that. But overall, yes, definitely once a year, you should be reaching out to your insurance agent to just talk and say, hey, can you just take a look at my account? Let me know what things look like. If I see that, someone's home insurance went up 2% year over year, which would be fantastic. We don't see that too often anymore, with some companies liking to double rates on a yearly basis. But if someone calls me and wants to review their account, I'll take the time to make sure, hey, if it's worth running through some new quotes to see what else is out there, obviously we can do that. But in most cases, once a year would probably be the best to just do an overall account review.
Is there anything that should prompt, other than like your renewal comes in and somebody calls you? Mm-hmm. But is there another reason why somebody should reach out and discuss like their homeowner's insurance policy? Maybe they're making more money, they're buying more things, their personal property like might need to be adjusted or something like that. Like, are there any life changes that like should prompt that though?
Yeah, absolutely. So really anything resulting in a change in how ownership is laid out, be that through the death of a deeded owner of a property or a divorce where they're, if they're going through a divorce and one party is keeping the property and maybe, paying off the spouse to be removed from the deed, something along those lines. All those kinds of changes are definitely something to talk with your agent about. Definitely the sale of the home. There are some insurance companies that are starting to change how they, kind of how much they will backdate a cancellation of a policy if the home is sold. So if it's, if a home was sold 3 months ago and the insurance company says, hey, you have 30 days to let us know that your home has been sold in order for us to refund you any due premium. Some companies are starting to reduce the amount of refund that they give based on the processing time of that. But when it comes to the change in like personal property, things like that, that's definitely something that to a certain degree can be changed midterm, but you usually want to do that right before the renewal of a policy, so you can see what the rate impact is going to be on a new full term versus just a 6 month term, 6 months or whatnot.
Okay.
Excuse me, sorry. What, since you're talking about the homeowner side of things, with them, one, obviously not the mistakes that they make when it comes to insurance. I mean, you just said one, like, hey, they don't update anything, or they don't tell the insurance company, hey, they sold the house 6 months ago and they basically just paid a 6 month premium for no reason. What are common mistakes you see homeowners make?
Yeah, some of the major ones are really going to be as far as trusting your agent. Obviously in any industry there are going to be the couple bad eggs, but really understand that whether it's me, whether it's an agent that you've known for a long time, personal friend, family member, we're licensed to talk about what we talk about, and we're always here to advocate for you as the client, not just to get a sale. So when it comes to understanding, like I talked about earlier, the difference of a 2% to a 1% hurricane deductible. Obviously, we can talk about numbers and pricing and things like that all day, but when it comes to, if I say, hey, this is $150 more for the year, but in the event of a hurricane, it'll save you $4,000 out of pocket, something like that. A lot of times we will see people make the choice strictly on price, that they don't want to, make a change or add an endorsement or include something that we would really consider an important addition. So really, trusting the experts, whether it's the person handling your mortgage or it's the person handling your insurance policy, to be able to guide you, to a proper spot.
I think one of the common mistakes, and this is where I appreciate Kris a lot. Common mistake is a new homeowner trying to get the cheapest insurance possible. And
All the time.
It's just like, I need people to be aware that the absolute cheapest coverage can in no way be the best coverage. So one thing Kris and I do, and I'm sure Steven, you do the same thing, is we want to find that happy medium. We want to find a good company that has a good history, that has a good policy, but for a good price. Like the most expensive policy isn't necessarily the best either.
Absolutely.
So trying to find that happy medium. And then don't get sucked into the whole, because I've talked to Kris about this too, like bundle your home and auto and all this stuff and add your jewel. Like there's a lot of other insurance companies out there that just want to continue adding and add, like they want you to have 10 insurance policies with them, and it's just unnecessary. Unless you're like a licensed jeweler and you have $1 million worth of diamonds in your house at all times. Maybe you talk to Kris about a separate policy. But I've just heard so many times other agents like trying to add and bundle and do this. There's sometimes where it makes sense. And then a lot of times, like, sure, your car insurance went down, but your homeowner's insurance doubled because you bundled. That's
Exactly.
dumb. That's dumb.
Yeah. And I mean, nowadays the term bundling doesn't even apply as much as it did 5-10 years ago. Half the companies that were writing both auto and home insurance in Florida nowadays don't do it. There are many companies that, primarily are auto insurance companies that also were advertising to bundle home with them. Most of them have either stopped writing home insurance in Florida or have, shut down the amount of production of home insurance, so that even if you wanted to bundle with them, most of the time either your home isn't going to qualify, or they're not going to give you as much of a discount as you thought. That's why in especially with people who are purchasing their first home, I don't even talk about auto insurance until I do a follow-up about 30-45 days after their purchase, where I can say, hey, everything's good with your home insurance. I work with 15 different auto insurance companies. Let's take a look at things from this point to see if there's if we can save you anything versus where you're at.
Right. Am I allowed to have a trampoline?
Yeah, I mean, there's the same question applies to, can I have a restricted breed of dog? It's, liability, personal liability coverage is, in my opinion, one of the most important coverages you can have on any type of home insurance policy. Um, in the event that something happens on your property, someone slips and falls, they try to find you liable. This is, protection for, coverage in that event. Companies are very specific with what they will and won't provide liability coverage for. There are absolutely companies that will accept a trampoline, a diving board, a restricted breed of dog. In most cases, where they do accept that, they're just going to exclude the liability coverage for if something happens involving the diving boards, the trampoline, or the dog.
I just feel like there was like a couple of years where people were getting in trouble because they had trampolines or didn't tell like their insurance company about it or something. I don't know.
Oh yeah, absolutely. I mean, there are the biggest thing that you'll see is, let's say you've been with the same insurance company for 5, 6 years, and in year 5 you decide, oh, we're gonna get the kids a trampoline. Okay, not a problem. You just keep on renewing with your policy, and then you have a water claim, in your kitchen or something like that. The adjuster comes out. They're gonna figure out what's going on with that claim. But as soon as they walk around the backside of the house, they see the trampoline in the yard. They're gonna snap a quick photo of that and update your policy to say, hey, while they do have this claim going on, we also noticed a change in the overall risk, and the insurance company is going to reach out to you.
Adjuster.
Not yet. I mean, it's not just the adjusters. It's,
take your trampoline down.
Yeah.
Yeah. Every insurance company, when we write a new policy for someone, just about every single company is going to have a field inspector come out. Doesn't always mean they have to enter the home or whatnot, but
Right.
You see posts on social media all the time of, I saw someone driving by my house snapping photos of the outside. Does anybody know what's going on? 90% of the time, it's going to be just the field inspector from the insurance company driving by, snapping some photos of the house to make sure there's not a hole in the front of the roof or, anything major like that.
Gotcha.
Good
All
old
right.
insurance. What about an umbrella policy?
Yeah, absolutely. That umbrellas definitely go hand in hand with obviously the home and auto situation. Umbrellas usually have minimum personal liability requirements for both your home and your auto insurance in order to qualify for an umbrella policy. In most cases, when I'm able to with clients, we'll sit down and do a little bit of an assessment as far as, total assets. Do they own multiple properties versus this, to kind of show an adequate level of liability coverage that they want to have. A college student who's renting their first apartment and maybe walks to school isn't going to need the same amount of personal liability coverage as, someone that is, a little bit more experienced in life and owns multiple homes and whatnot, has more assets. Obviously, we as an agency have minimum standards of coverage that we're going to include on every policy. We don't write the kind of bottom of the barrel policies for auto and whatnot, but umbrella coverage is very important for people, especially if you have multiple properties that have annual tenants, things like that. Very important.
I think that wraps up. You have any other questions, Derek?
One last question. And this is something I've just been, I don't know why, but I've been doing more investment property loans. And we're writing, like a lot of them are doing the DSCR because they want to hold title in an LLC, so limit the liability to someone's personal name. And Kris can write insurance policies in the name of an LLC. So for investment properties, do you think that is beneficial versus having it in your personal name?
Yeah, absolutely. And, I think there's a lot of nuances as far as, how policies are written. If one person has 10 different LLCs, each one associated with a different house that they own, obviously we can do things for that, specific to like having if you want one umbrella to give you liability coverage across multiple properties, an umbrella can only be written in the name of a single LLC. So if you have a bunch of properties written in different, LLC names, that can complicate things a little bit, but I'll always recommend it just to kind of separate the personal from the investment side of things. Gives a little bit layer of a protection from there in general, especially when it comes to claims history. Some companies will just look at the claims history of a specific LLC versus the owner who's associated with the LLC. So that can make a difference, especially if it's, a multitude of properties. And, obviously if you have 20 properties in your personal name, well, if you file a water claim on one or two of them over the years, that's going to impact your insurance across all of them versus if it's in an LLC, it can kind of change things.
Awesome, man.
Well, that wraps it up, I think. Insurance in a nutshell.
Yeah,
So-
a big nutshell. Kris, is there
Yeah,
anything
yeah.
you wanted to add?
Yeah, no, I mean, overall, we kind of covered just about everything with, as far as advice for new homeowners. The biggest thing that I would just want to say is, price is not always king when it comes to insurance. Renewing a policy over a little bit of an increase can sometimes save you in the long run versus thinking, oh, I have to save $200 year over year with my policy, but saving that $200 might make it so you have to be placed with a company that might not be as good or have as good of a claims handling situation versus the company that you're currently with. So it comes down to trust the experts, trust your insurance agent, and trust your mortgage broker to be able to, handle things properly for you and to recommend, policies for you based on just their general knowledge. And then, you can always follow up with an agent with questions.
Yeah, I always thought that your homeowner's insurance does increase. It should increase every year. Just if you think about it, it costs more to build your house in 2024 than it cost in 2023 just because of cost of goods. Like
Right.
inflation, anything else, like it's always going to
Well, your
cost
home's worth
more.
more.
Yeah.
So
Yeah,
it's
but it's the
cost
people
more
that
to
had
do
like
it.
a $2,400 per year premium, like that was the cost of their insurance policy, and then they get a renewal for 4,900. Like,
Yeah.
oh, that's just
Yeah.
more than double.
Is it-
No big deal.
yeah.
And if they escrow, then the mortgage company's like, well, we paid this, so now your mortgage payment's going to go up $500 per month in order to cover that and then replenish and blah blah blah. It's a
Exactly.
nightmare.
Yeah. Obviously, yeah, huge difference there. In in terms of when you should be calling your agent, because if you see your rates double, yeah, definitely give them a call.
Well, Kris, thanks for joining us. Appreciate you, buddy.
No, thanks for having me, guys. Greatly appreciate it. And let me know if anybody needs anything or has any questions, be happy to answer.
How can people find you, Kris? Social
Yeah,
media.
absolutely. Yes, on social media, Facebook, LinkedIn, it's obviously Kris with a K, Kris Allan, Allan. Best, easiest way to get a hold of me is email. I'm unfortunately always on my phone, always checking the email. Even when I'm stuck on a phone call with an insurance company, still checking email. So it's Kris.Allan@brightway.com. And then I'm sure you guys will post my, phone number and information. So if they have any questions, feel free to call or text.
Perfect.
Thanks, buddy.
Awesome.
All right. Have a great day, guys.
You too. Thank you.